All right. Good morning, everybody. It's Tuesday the 16th, 10 a.m. We just ended our session, ended up trading a total of three trades, in which we made a very small profit. It could have been a little bit more, but I lowered my risk on this last trade considering it was nearly the end of my session. So let's go ahead and talk about our trade, and break down all three and why we decided to take it.
Stories, I'm a fool for your love.
So today was some retail sales. We had the core sales and then retail sales, which uh, were a little bit less than expected, but price reacted in a positively way. We thought price would maybe come down to this demand zone in here to fill in this gap, but instead, price ended up creating a new demand up here after breaking these highs. So we decided to get in semi-aggressively, semi-confirmational. We still placed our stop loss at the bottom of the zone. And then price ended up just not giving us the push that we wanted, and we ended up getting stopped out for like a 1% loss. So that one was a little bit of a bummer. It was our first loss in a couple weeks, so that one kind of hurt. But it was very risky considering that there is this imbalance and this gap below. But yeah, that one didn't work out too well. But we decided to take it because price ended up making basically what it is, what's known as a check mark demand zone, where price kind of just fidgets before taking off, breaking multiple highs. And that's what we saw. Kind of gave us a really strong confluence because of how big of a push we had to the upside. And then we decided to take a small one-to-one shortly after. We did want to get in around here at the break of this candle, but we ended up kind of waiting for confirmation and ended up eking a small profit for a one-to-one. So let's go and break down this one. This one was actually a fill imbalance trade, kind of similar to this gap here, where we had leftover orders here on this imbalance, because what price did was it left this imbalance, and when price leaves an imbalance in the market, it's leaving leftover orders. So when the price leaves off the market in a particular way where price doesn't wick back into the body of a candle, they leave open orders in these areas. Now, I know that price wanted to perhaps at another time fill in this gap right here, but this huge push from price filling this imbalance was kind of the confluence for me that, okay, the market makers are probably going to push price higher. But we just want to get in onto a one-to-one trade and not hold a big trade because, um, it was just news, and we still have some gaps below in a demand zone here that price could eventually maybe melt down to mitigate before making a higher high. So we were able to take a nice one-to-one here on this trade, filling this imbalance here below. Now, the last trade was a demand trade. As you can see, price ended up breaking these intermittent highs right here from this drop, and price created a nice easy one candle demand zone. Now, we didn't get in aggressive. We wanted to wait for a what is called a break of candle entry. So a break of candle entry in my trading plan is basically a confirmation entry. When price taps into a point of interest, you want to see the next candle break the high of the bearish candle before it that tapped into the demand zone. And that's exactly what we did and exactly what we waited for. We didn't go full risk on this. We went 75% risk, which is why if we did go full risk, we would have eked out like a probably 0.5% to 1% profit on the day. I think it would be more 1%. But we were completely fine with taking this trade because we had a confirmation entry, we had a break of structure to the upside, and we had an obvious demand zone in here. And we were targeting a 1 hour, a 4 hour supply zone in here. And as you can see, price did mitigate this 4 hour supply zone. all the way out here where price uh, dropped significantly fast here around the August 22 date. So we did wait for price to tap into that POI. And we did get filled on a 1 to 0.750 risk to reward. And then we ended up pretty much break even. We did make 65 or $70 on the prop firm exam, and then we ended up making, I think, like 10% on the cash account. But overall, it was a pretty shaky day. Price really wasn't moving that quickly until this demand filled and they took price up, breaking these structure highs and tapping into this 4-hour supply zone. But besides that, that's how today went. We were probably going to end our day once price, if price would have broken this demand zone and ended up retracing. It was getting close to 10 a.m. and I don't do trades after 10 a.m. So that was the reason for this trade. We were very bullish overall this week. Since price broke down here, we started reversing, and we were primarily looking for buys. And as you can see, there was really no confluence to go short. So that was the confluences to this trade. This is how our trading day went. Maybe tomorrow will be a little bit more different. We may or may not take a trade tomorrow. Wednesdays tend to be a little bit slow, tend to be a little bit choppy, tend to be a little bit tricky. So we may or may not trade tomorrow, depending on the setup. So we hope you got something out of this 3 setups. It was a war zone out here for sure, but we hope you guys enjoyed this. And stay tuned for another video. We're going to be going over some of our strategy confluences, what we look for in the market, kind of some basic demand, supply and demand information. But yeah, we hope you enjoyed this. If you guys want to get into contact me, all that's going to be down in this description below. And we also have a free 11-page PDF over a rough draft over our supply and demand trading strategy. So if you want to see that, also visit the description below. It's completely free. It is a rough draft, so go easy on me. It's kind of just there to roughly show you what I do. But hope you enjoyed today, and we hope to see you guys here shortly.